What's up, everyone? Welcome to today's daily market recap. In today's episode, I'm going to break down my trades from the day. I'm currently sitting in the green. We have a stock squeezing up right now. I've left some money on the table, but I decided not to overstay my welcome because, well, as you probably know, the market, the last few trading sessions, certainly the end of last week and then yesterday and so far today, it's been a little choppy. We've seen a number of stocks give us this kind of round trip move where it pops up and then comes all the way back down. But you know what's interesting? Yesterday, after the close at like 5 p.m., what ended up squeezing? But Chinese stock RGC, let's pull it up on the scans here. So RGC yesterday squeezed up after hours from $19 to $35 a share. Unbelievable. What a squeeze. Just kind of out of nowhere. And you know what? This is that kind of Chinese effect where it's sort of at a random time right here. It catches everyone off guard. Shorts aren't ready for it. Longs maybe aren't even paying attention either. And I don't know what triggered it. I don't know if it was a WhatsApp, message alert, because a lot of these Chinese stocks end up getting those, or if it was something else. But I mean, there was no news. So in any case, for whatever reason, 5 o'clock, this thing rips up to a high of 28. And then it actually does a pretty nice little bull flag here and goes up to $35. It's not a bad pattern. It's just at a time when generally no one would be trading it because it's just an unusual time. So when I first sat down this morning, RGC was our leading gainer gapper. And I just thought, man, isn't that typical? This is a stock I lost $6,000 on last Friday. And now it's at the top of the gap scan. And I just felt annoyed. The whole thing just really annoyed me. This is going to be one of those stocks that, in spite of making, over the past 4 sessions or whatever it is, this nice move Thursday into Friday and then Monday, to Tuesday, I managed to lose money on it. So whatever, it is what it is. But this morning when I sat down and saw it, I just knew that it wasn't something I would trade. So why was it that I decided this did not have the potential? Main issue, price, too expensive. Because now here's the thing. Well, it's come down a little bit, $22 a share. But when I was looking at it earlier this morning, it was $31.50 on the bid and $33 on the ask. That's a $1.50 spread. $1.50 in the spread is just too much. So the reason you have such a big spread is because really, there's not a lot of people that are wanting to trade it. The more traders you have, the tighter the spread gets because there's more competition. There's more people willing to bid it up, and there's more people sort of selling it down, so the spread gets tighter. So a thicker market is going to have a tighter spread, and that's okay, but you can also get to a point where a stock is too thickly traded, where there's so much competition that it just doesn't even move. It just becomes crowded like a tug of war. And then on the other hand, you have a stock like RGC that's so thinly traded that you can't manage risk on it. So on the thin side, you can't manage risk because the spreads are too big, $1.50. And if you tried to buy on the bid, your order would just sit there because there's not a lot of people selling. Even if you tried to put your order between the spread, you still might have to wait because there's just not a lot of people buying and selling it. So if you really want to get in, you have to buy at the ask. You're instantly down $1.50 on the bid. And then if the bid drops 50 cents, now you're down 2 points, just like that. So you're taking too much risk. But then, of course, on the thickly traded side, it's not about a lot of risk. It's about you don't have a lot of reward because when it's really thickly traded, you're fighting just to make a penny. So there's not a lot of profit potential. So this is all kind of the risk and reward, ratio and kind of analysis that we're all doing every day when we're sitting down to trade. So when I pulled up RGC, I just knew that one was not going to work for me. Price, too high. Spreads, too big. It's a no-go. So with that, at 7 a.m., I said no. It did pop up here at 7:25, and this is when it had those really big spreads. So on this candle right here, just for what it's worth, 52,000 shares of volume, and it went up like $5 a share. So, it's just hard to trade. All right, so that was RGC. No trades on that for me. So I broke the ice, however, fairly early with my first trade, which was on RDHL. So RDHL pops up and it has news that comes out to submit FDA approval for UK marketing authorization. Okay, so biopharmaceutical company, 1 million share float, have traded it in the past. And I saw this hit my scanners, and initially I was like, nah, I got to be careful because we've seen a number of stocks that have popped and dropped, right? The pop and the drop, the pop and the drop. So here's what I did. I didn't trade it here. I said, no, I don't trust it. I didn't trade it here. I said, no, I'm going to wait a second. But when it came up right here, I got in right there at 344 approximately. And I was looking for the break through the $0.50 of 350 and then squeezed through the high. We got it. So I got in, I sold half right about here, something like 360. And then all of a sudden it nosedives. I sold the other half down here for a loss. I locked up $21.23 in the green on RDHL. That was my first trade of the day. $21. You can't even buy a bagel for 21. Well, I don't know. You can't buy even a dozen eggs for $21. Well, barely. In this economy, $21 doesn't go very far. Now, granted, I guess I did make $21 in about 45 seconds. So if you, I suppose, extended that out, it's a pretty good hourly wage. But nonetheless, I'm looking for more than $21 an hour. So RDHL, little disappointing. That was my first trade. Broke the ice, and I didn't get much of a reward for it. But of course, I was taking risk like I do on any other trade. So that was the first trade, a little disappointing. Second trade, I have to wait a little while, and then ADTX. So ADTX right now, at this moment, is up. Well, it peaked at about 89% on the day. 89% as it just hit 827. So it's on the scanner right here, as you can see. Very low float stock, reverse split, right? So this is a stock, this is so typical. We were just talking about this the other day. You get the reverse split. Then you get the breaking news. You get a ton of volume. What's going to come next? Well, very likely we will see an offering. So if we pull up ADTX here, we can go down here. You've got a shelf registration back here. So they have the right to sell up to $150 million of stock. And this is a company that, they probably will. They usually do. So if we look at the last quarterly earnings report, we can scroll down and we're going to look at a couple things. Number one, we're going to look at how much cash they have. So how much cash do they have right now on their balance sheet? This is as of September 30th, 2024. So they had... and now you got to check, because sometimes this is in millions, but it's not $328 million on the balance sheet. It's $328,000. In fact, I've got more money in my trading account right now. So they don't have a lot of cash on the balance sheet. They have some accounts receivable. They have some inventory. They have some prepaid expenses, and they have some subscription receivable. So their total current assets show is $2 million. All right. So then you can look at the... you can sort of look at some of these, but I really just look at the total current assets. So now we scroll down a little bit more, and the next thing I look at is the sales and revenue and the total profit. So what you see here is goodness. So in the 9 months that ended September 30th, in the 9 months, they have sales, which you can see here. They have a loss. So gross profit loss, it's a loss. The net loss from operations is $22 million. Yikes. $22 million. Now, they also have some other income and expenses. They have got interest expense, amortization of debt discount. They've got loss on note exchange agreement. So all of this comes down to $35 million. So this is a lot of money. But it's not uncommon for a biotech stock to be operating at a loss. They operate at a loss typically until they develop a drug that they can successfully bring to the market, and then they can make hundreds of millions potentially on that. Having said that, these companies can get into a situation where they do need to raise capital, and the way they will typically raise capital is by selling shares on the open market. They can do private placement, which is that's always an option. And now going through here. Let's see. H.C. Wainwright. So it looks like that's the company doing the underwriting. This is a $35 million offering. Offering agreement December 20th, 2022. Oh, so that's an older one. Yep, so $35 million. So So all of this is to say that it shouldn't be super surprising if we do at some point see news of a secondary offering where they are selling shares on the market to raise money to help, cover operating costs for the company. And when that happens, depending on the price of the offering, usually the stock will decline in value because selling more shares is diluting its value. I mean, literally, you're just diluting the value by selling more shares. So what we have right now in the short term is a stock that, as of right now, has a very limited level of supply, does have breaking news, and that's created demand. With that limited level of supply, you're getting that imbalance between supply and demand, and now it's up 75, 80%. And it could go higher. Now, shorts may eventually be right, and it may end up in a week, a week's time, be back at $4, maybe lower. On the other hand, it may go to 10 first. It may go to 12 first. Could even go higher. And so I don't know that it will, but the fact is these can be very volatile. So here's how I approached it. All right, so ADTX hits my scanners, and I'm probably one of the first people that saw it, just because the way my scanners are tuned to see this very quickly. So I saw it pop up right here. And in this move right there, I did not trade it. I was like, no, I got to wait on this. So it pops up from 4 to 650-ish, and then it was about 615, and then comes back down to 450. So basically another round trip. Not what we like to see, right? But then it slowly rallies back up. So you see how it's just starting to rally back up? So I took my first trade on it right here. So that's the line, and I bought right in here as we started to break away. So I got it in about $5 and 38 cents, 5.41 and 5.45 for the break through the $0.50, and right in there made about $1,000. However, I got back in right here, and I gave back the profit I had just made. And so I ended up getting in this kind of situation on this stock where I kept getting in, getting out, getting in, getting out in this area around 6, and I churned a lot of shares, and I wasn't making money. I was just breaking even and taking small losses. So it's like really choppy right through here. It was super frustrating. I just could not gain traction. I just couldn't. So it ends up selling off, dipping back down, kind of popping up, I guess you could see there, up to 615, then dropping back down, going below VWAP. And then I'll show you my best trade of the entire day. Best trade of the entire day. Right here, it reclaims VWAP. Now, it had reclaimed VWAP right here, gotten back above it, and then dipped back below it. So right here, we get back above VWAP right there. We're pulling back, and I'm watching it right here. And I bought the first 1-minute candle to make a new high, which was for the breakthrough 575 right there. So I got in, it pops up here, and then right on this pullback, I add to the position right there. And then we get a move up to about 615, 620. Now, what I was hoping would happen is I was hoping we would break through that flat top, because now we've tested this level up around 615, 620 3 times. Once, twice, and 3 times. I was hoping we would break it right here, but we couldn't. We sold off again. So it sells off again, and at that point, I was like, you know what? I'm done. I'm not going back in. So the bell rings, it sells off, and then all of a sudden it rips right here into a halt up. It opens and does a dip and rip up to 7, but very choppy here. And I said, nah, I can't trust this. So it ends up going sideways here, and then finally pops up, pulls back, and we'll put it on auto. You can see here, grinds up towards 770. Drops back down to 670, and then climbs back up to 78, drops back down, up and down. And you can see this area, it really starts to become a battle. It's just jumping around. So you see these topping tails, how it pops up and then drops back down. You see what I'm saying? It's very hard to trade that. Honestly, it's infuriating. It just drives you crazy. So this type of price action is very difficult to manage risk on. And unfortunately, even though right now it's halted up, and it's great to see, these types of false breakouts, it just wrecks so many traders. You buy for the breakout, then you get caught, you flushes, and then it goes. And So I just find when stocks start behaving this way, I'd rather just leave them alone. So I think this is one of those stocks where, to be honest, it really was not that clean. Now, here's the P&L for the day. $9,019.69. No thanks to that first trade on RDHL, which was only $21.23. But, finishing the day just under 10 grand, and the daily goal is $5,000. So now, in 2 days, yesterday I was up 15 grand, today I'm up 9,000, so $24,000 on the week. There we go, getting a little progress, getting a little bit of a cushion. So now I'm going to feel a bit better going into Wednesday, ready to take on a little bit more risk. So Wednesday, Thursday, position potentially to be really strong days if we can see some good momentum. So even though I don't love the price action on ADX, it's still good to see a stock squeezing up. Even though I don't love the price action on RGC, it's still good to see a stock making a big move. So now let's take a look at the S&P 500. What's the overall market doing? Well, interestingly today, the overall market's actually pulling back a little bit. So we still have some strength here in small caps, but the overall market having a little bit of a pullback versus the close from yesterday. So of course it's still early in the day. We'll see how things end up, shaking out. But we're below the 200 moving average, and potentially this is just a bear flag that's going to resolve back to the downside. So I am a little concerned about that. Obviously, this is all dependent on tariffs and things like that, and what happens with these geopolitical conversations. So there's a lot to be determined, completely out of our control, and all we can do is really ride the waves of the market. But I will say it's good to see that we're getting some nice momentum on ADTX. So as of right now, something exciting to report. So we are about 50 trading days into the year. I have not missed a day yet this year. I hope to not miss too many days. But let's just do a quick check-in. So here we are. Oops, I'll just go like this. There we are. So this is the last 30 days. That's the last 60 days. So you can see kind of, P&L kind of flattening out a little bit here. A couple smaller green days in the last week. But yesterday at 15 grand wasn't bad. Thursday at 14,000 wasn't bad. Today at 9,000, that's not bad. Let's check the P&L year to date. $1,550.85. So $1 million in about 50 trading days. We are about 1/5 of the way through the year, almost a quarter of the way through the year. End of March will be, first quarter in the books. I've been averaging $20,000 per day. Now today, again, a little below that average, but accuracy, 71, just under 72%. Average winners, $1,800. Average losers, $772. This is consistency. This is what consistency looks like. And I'm focusing on trading during the time of day when I know I make the most money. That's when I'm the most aggressive. I'm focusing on trading the type of stocks in the price range where I make the most. I'm focusing on stocks that have 5 times relative volume. I mean, everything right now for me, I'm dialed in on. So each day when I'm sitting down, I know exactly what I'm looking for. And although there are some days where I'll trade a little outside, maybe my wheelhouse if I'm feeling a little confident. For the most part, my first order business is building a cushion and getting green. And so right now that's, 50, more than 50 green days in a row. And the hot streak began in December. So, not to count it, but I'm probably approaching like 70 green days in a row right now, if I'm going to be real. And again, I'm not counting. I don't want to know the number to the exact number because I don't want to get too fixated on it. Last red day was end of November. So figure 20 green days in December approximately is going to put me 50, so 70. About 70 green days in a row right now. This is a really strong hot streak. I haven't had a hot streak this long, I think, ever. And so, a little bit of a question there is, all right, how do you put together 50, 60, 70 green days in a row? And I realized that in theory, I should never have another red day because of a change that I've made. Now, in practice, that's not going to be the case. There will be red days. But in theory, I shouldn't have another red day because as long as I'm managing my risk on every trade I take, and I can always take 10 more trades each day, As long as I can always take 10 more trades at 70% accuracy, even if I go red on the first 3, well, I'll just take 10 more. Odds are 70% accuracy, I'll close out green. Now, it's certainly possible out of 10 trades, I could have, 5 losers and be at 50% accuracy just on that 10 stretch. But as long as there's enough trades each day, I should be able to recover from a loss as long as I don't dig the hole too deep on those, 2 or 3 losers that I might have in a row. In practice, what I know is that, even on a day like today, if I had taken a really big position on, I don't know, RGC or something, as it turns out, I guess I probably could have made it back on ADTX, although with all this chop, I don't know. There's probably people who traded it only starting at 9:30 opening bell and are red because of all these jackknife candles. So I don't even want to assume that I would have been able to be green on this. But my approach that's been working really well right now is to start each day by building a cushion and only size up once I have my cushion. That has helped me tremendously reduce the size of losses and reduce the frequency of red days. So, I think my biggest risk right now for a red day will be I have that outlier trade where I jump in, whatever for the break of like $7, and I just catch a full jackknife down to like 6 or 550 with like 10,000 shares. And I'm down, 10, 15 grand in one trade in an instant, which is far beyond what I would have expected to have happen. And it's just bad luck. And sometimes that happens. I could have a red day because I lose internet in the middle of a trade, and by the time I'm reconnected, I'm just down too much, and I cannot recover the loss even in 10 more trades. Which also brings me to the point that I may not be able to recover every loss that I have before the end of the trading session, but does that really matter? Because I've got 100 more trades in my future, right? Every day. I know I've got 100 more trades in my future. Now, maybe those are going to be spread over 4 or 5 days, but I've got 100 more trades. So as long as I can maintain the discipline to focus on quality setups over the next 100 trades, I will make money. And at the, average of, well, we could pull up the metrics there again for a second. What were the average winners? It goes $1,800. Well, but then, there's going to be, so I guess you'd have to kind of do some math. So $1,800 winners times 70. So 7 times 2, so like 140. And then $700 losers. So 7 times 3 is 21. So 140 most of them. So 100. So like $115,000 over the next 100 trades, something like that, right? So something like that. So that money's there. It's just waiting for me to pick it up, and I will get it. There's a catch. Have to have the discipline to follow the rules. So if you guys want to watch over my shoulder, as always, I'll put the link in the top of the comments and the description of this episode where you guys can do a 2-week trial. Would love to have you come check it out, see what it's like to be a member at Warrior Trading. We've got a great community here, a wonderful community of traders, a lot of traders that have profitability badges, $200,000, $250,000, $500,000, $1 million badges, giving their commentary in the chat room, typing it while I'm on the audio video broadcast. When you do the 2-week trial, you'll have access to this software right here. So you'll be able to actually have your own instance of this, the scanners, the charts, the news feed, and of course my audio video broadcast. And you'll have a selection of classes from the Warrior Pro curriculum that you can watch. So you can learn more about the strategy that I'm trading every single day. Now, I'll remind you as always, trading is risky and my results are not typical. So you've got to just recognize that it takes time to get to this level. It didn't happen for me overnight. It doesn't happen overnight for anyone. So I'll give you my strategy, but what I ask you to bring to the table is the discipline, the dedication, and certainly the drive. All right. So thank you guys as always for tuning in. I hope you enjoyed this episode. I do hope you are subscribed to the channel, and I will see you for my next upload tomorrow afternoon. And I will be streaming bright and early, 7 a.m. tomorrow morning for all of our members here at Warrior Trading. Okay, I'll see you guys tomorrow.